Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that since the Australian dollar struck a high of 80.38, the market has failed to recapture those levels and since then has continued to fail above 80 cents. At this stage, I'm seeing some divergence to the bear case. That does suggest that we should see a decline back to 79.30.40, with any upside attempt still likely to fail towards the 80.25 after the overnight high printed a high of 29. So I'm still bearish from the technical point that the MACD is breaking down, as well as the RSI too. It is a little bit concerning now that the bearish outside range day for euro and the bullish outside range day for the US dollar has been negated. At this present stage, we are looking for a further rise, possibly, but I'm not overly bullish at these levels because there is still divergence. If this bearish divergence continues, now bearish divergence is quite a strong negative signal, we could see a snap to the downside. Still to come this week, though, is the European Central Bank's rate decision, which may give the markets some more clearness on terms of the first interest rate potential talks or rise in the coming future. That said, though, Mario Draghi will no doubt likely try and turn this all around and try and push the view out towards 2019. Also to come is on the January the 31st is the US federal rate decision as well, and the market will be keeping a very close watch to that. Also, where my view is that I'm expecting a hike in March, but we could see that coming a little bit sooner, depending on how the Fed's thinking. So on the day, I expect to see any advances towards 123.45.50 to fail and look back towards 122.40. And this is only because the divergence is holding. Well, dollar yen's bullish outside range day has possibly been negated now. As the market pushes lower, it's now looking towards a region of 109.65 and reassess from there. From a technical point, there isn't any clear indication of a recovery in the short term, so it's unlikely to see the market test up towards the highs of 110.80.85 in the next 24 hours, but still remain focused to the support. It's interesting to see that the pound is pushing higher. Nevertheless, the RSI is overbought, as we're now looking towards highs around the Brexit. Very interesting to see, though, this has been a dry month in conversation with Brexit talks, and I do expect to see something emerging out of the press soon, which could actually put a bit of a dampener on this rally for the pound. But what's keeping it going at the moment is the fact that we could see very soon, in early February, when the Bank of England comes to look at its rate decision. And it's possible we might see a hike there. That would in turn push the cable up to better levels in terms of selling. But nevertheless, at the moment, 140.60 seems to be the cap for now, with support at 139.55. It would seem that the gold outlook has turned back towards that rejection point where the bearish outside range day was posted at 1,345. At this point in time, from the rebound, we could see a test there. It is a little bit interesting that the rest of the indicators with the RSI and stochastic is actually turning up to a slightly firmer case. Overall, I haven't been bearish on the commodities. I've been looking for a correction to buy into, and that seems to keep being from a point of shallow pullbacks. So a break of 45 would give further scope up towards 51 or even as high as 56. And any pullback on the day may find support now at 1,336. The silver outlook took a stab to the downside overnight, as you can see, and finding support just around that $16.80 level. From the recovery, I do expect to see further upside tests for silver, and this could bring into a target around 25 to 45. Overall, dips are still likely to be shallow, and from the correction is actually more slightly bullish than it was over the last few days. And to round off with oil, the market is posted slightly better gains overnight, but nevertheless still contained by that 66 resistance. Overall, I do expect to see the market fail towards that top side of the range and still keep an eye towards 62, 60, 65. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the day that's ahead.